Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. As you can see, on location this week in New York City, we're down here for the H.C. Wainwright conference. We're going to be discussing some of our top takeaways in today's episode. In addition, we just received production results from DMG and Soluna, both of which actually presented at the conference. And finally, discussing this melt up we're seeing at the Bitcoin mining space, an absolute frenzy as the re-rate has begun for the Bitcoin miners moving over to HPC and AI. All of that and more in today's video. Before we get into it, take a second, smash the like button, you guys. Big help to myself and the channel. If you're not already subscribed, feel free. And with that being said, let's get into today's podcast. All right, guys, Wednesday afternoon, obviously a very exciting, happy time in the Bitcoin mining sector. We're going to talk about the price action, this melt up phenomenon we're seeing in the space towards the end of the podcast. But before that, we wanted to give you guys some insights and our key takeaways from the many presentations we've been sitting through over the last 3 days in New York at the H.C. Wainwright conference. So obviously we did not get a podcast out yesterday. We apologize for that. However, we were very busy collecting some nuggets, insight, and details from the many CEO presentations we got to observe here. The nice thing about this conference, nearly every miner that we cover on the channel was here in attendance. So we got some great FaceTime, and we'll start off with Cipher. This really seems to be one of the darlings of the space right now. Obviously, a lot of expectation or hype around their portfolio of power. For me, the highlight from this one, Anthony, he specifically talked about the fact that the market is trying to value all of these companies based on their current megawatts. And he made it very clear that the people, the team, the techniques they use to acquire these initial sites, those people are still employed at Cipher. They still come to work every day and they're continually looking for new sites. So essentially, don't underestimate this team. They're not stopping here. Another key point that I picked up, he mentioned, again, reconfirming at least one deal by the end of year, implying multiple. And I know Mike Alfred tweeted that out as well today. So for Cipher, obviously a lot of attention, a lot of excitement, and some great takeaways in my personal opinion. Anthony, what were your thoughts on this one?
Yeah, absolutely. They're renowned for building data centers. Yes, the rest of the miners, who designs and builds good data centers. Cipher's name normally appears in those two or three that are mentioned. One thing they have got is obviously they've got the Black Pearl site and the Barber Lake site. Black Pearl's already got 150 megawatts of miners, with 150 megawatts energized for either more Bitcoin miners or potential HPC, and Barber Lake 300 megawatts looks like it's going to be utilized for HPC when an announcement comes along. But I raised the question to Tyler to say that, in the event that you had a significant deal coming through and you effectively have not 450 megawatts of energized power, you have 600 megawatts. Would that then look to utilize the whole of those two sites? And the answer was clearly a yes. So you can see that, and along with the fact that they have a number of other options to grow sites, that they've already got options to purchase and to put power on there. So this isn't going to stop for Cipher. I'm hoping, like you say, we get an announcement by the end of the year. And overall, great to catch up with Taylor, great presentation, and I think it's caught the market by nice surprises last few weeks.
Yeah, I certainly do as well. It's funny you say you asked a question. I think you and I probably asked more questions than anyone else at this conference. But again, just excellent FaceTime and getting the details right from the horse's mouth, so to speak. So next up, and this is all in chronological order, after Tyler Page, we had the pleasure of hearing Sam Tabar. Now, he did two separate presentations, one for Bit Digital, one for WYFI. We'll cover both in the same discussion here, but again, share price on both of these companies really rallying. Sam, for years now, has been on our podcast saying, I'm going to spin this out. I'm not getting the recognition I deserve. He's now done that, and it appears it has worked exactly as intended. I guess the highlight for me from Bit Digital was the marketing, essentially leveraging a fleet of vehicles out front of the conference center. I know a lot of people were taking these in, turning a lot of heads, and it appears that marketing strategy may be working already.
Absolutely, and yeah, I managed to get a couple of shots of those vehicles outside. I don't think anybody else was using that type of marketing strategy. Obviously, there was some sort of like stands inside the conference itself, but yeah, Sam did two presentations. Remember, you've got the holding company there, Bit Digital, and you've got the subsidiary company, WhiteFiber. Sam promised he would spin this HPC business away because he felt the market wasn't even giving him any credibility for that. And if you looked at as a Bitcoin miner with the fact they had a significant amount of crypto on the balance sheet there, he felt it was high time to do that, and he's done that. And actually, he looks like he's been proved right to do that because, as you can see, WhiteFiber share price has been doing well over the last few weeks since the IPO. Bit Digital share price equally doing quite well this last few weeks here, and the potential with Bit Digital as the as the holding company there, that looking at that Ethereum treasury management to grow that Ethereum and having that subsidiary focusing on delivering high performance compute, which it has been doing for 18 months now as a company. It's just remarkable. They were there at the start. A lot of other miners are trying to get into that space now, but they were the first ones to land a big client. One client 18 months ago, 23 today, more sites coming online. The future looks quite bright for both Bit Digital and WhiteFiber, and we'll be paying close attention as we go along the next few months.
Yeah, we certainly will. One of the key nuggets that Sam and team mentioned, I guess a strategic advantage or a differentiator for them, they're often going after locations, properties that aren't marketed as data centers. So Sam talked about an example. It was actually a mattress factory or mattress production facility. Only a few months ago, they were able to convert that to a tier three data center, so saving both time and money, and now giving the keys over to the client next week. So, a great demonstration of looking for value maybe in places that others aren't. And I thought that was a strong comment from Sam. Following Sam, we had Ben Gagnon. This was an awesome presentation. Ben absolutely nailed it. Many of the investors, the conference attendees, were coming up after his presentation and talking about how excited they were about this story. He really stressed the importance of Panther Creek, the location in this PJM market, and the fact that all of these international fiber connections through the ocean actually come into the United States very close to many of their sites. So I know a lot of people are excited about this former Stronghold Digital portfolio. Ben's gone out, acquired that, shifted their focus to US operations. And again, the market is really waking up.
Yeah, I mean, go back 6 months ago, and they were sort of operating, mining sites in Paraguay. They've decided to move from away from that. They managed to get a buyer straight away in terms of Hive Digital. They've ceased, obviously, operating in Argentina, and not through their choice, but through the fact that the government there decided to stop power for a number of industries down there. So they've now fully focused their attention on North America and predominantly the US. And that's going to grow significantly. Now, the key thing I found from his presentation there was the fact that the location of the Panther Creek site there. And if you look at the location of the site there, it's literally surrounded by about 7 or 8 sites that hyperscalers are using. So we know that particular area fulfills every requirement to have high performance compute located there. And Ben's been really, really bullish on that site there. We spoke to a number of analysts and a number of bankers over the last 6 months, and they've mentioned, that Panther Creek site there has got plenty of opportunity to develop high performance compute there. And Ben put his money where his mouth was. He actually went out and bought shares again in Bitfarms the other day there. So, as a CEO, we don't see that too often. We know Santa Bar did some recently. Adam Sullivan bought some when the Core Scientific share price was probably around the $3 mark last year. But Ben's been buying, a sizable amount on a number of occasions this year because he believes in the company. He's been at the company. There was a chief mining officer. Now he's the CEO, and his leadership is showing that he expects them to fulfill a deal in the very near future. And again, we'll be paying close attention to that. The share price has done really well since we've been at the conference, and we'll talk more about that later in the podcast.
Yeah, we certainly will. Not only has Ben personally been buying shares on the open market, but Bitfarms also has a share buyback program in the market right now. He was talking about that on our last interview. Essentially, as Riot was exiting their position, Bitfarms was on the other end of that, buying up shares off the market. So a lot of catalysts on the horizon for Ben and team. Now, next up was the Treasury strategy panel. So we took in two feature panels. This one and then the Bitcoin mining one we'll get on to in a second here. This was really interesting. A lot of the discussion focused around MNAV and what these companies have in terms of differentiators. As we see more and more companies, not only Ethereum, Bitcoin, now other tokens, getting into this treasury strategy or treasury model.
Yeah, and we've got, Michael Saylor to probably blame for a lot of this. In fact, that he was the first one to really go out there and do this treasury management on a scale that everyone witnessed. And he was basically looked at initially as like, why have you done this with a company? But if you look at that journey over the 5 years, has been nothing but significant. And you've now got this panel here, also saying, their firms are also looking at doing this. And obviously, Sam Tabar, who we know very well, as part of the panel there was, given a reason. I mean, bear in mind, there's a lot of Ethereum treasury management companies coming up in the last few weeks. Sam Tabar and Bit Digital were doing treasury management on Ethereum over a year ago. So, they were growing their Ethereum, even when they got it to 20,000, which was probably one of the highest amounts of any public listed company at the time. And then they decided earlier this year to sell their Bitcoin hodl and buy Ethereum. A move, again, that's been proven right for Sam and the team at Bit Digital. So hats off to them there. I think it's still too early to really determine how well this is going to go for a lot of the companies. I assume it's the management teams, the strategies that are in place, the opportunities to use which levers are available at the right time to deliver, a really robust treasury management system in a company. But we had some really good speakers on there who were able to identify through their own companies how they were going to deliver this.
Yeah, the real consensus from this panel, the companies getting involved in this sector, they need an underlying business and it needs to be profitable. At some point, the music will stop, and these treasury only companies, there is some speculation around how those will continue, maybe in the next bear cycle or so on. Sam also made reference to the fact that because of that unique Wi-Fi situation with Bit Digital, not only does Bit Digital hold all the Ethereum within that corporate structure, they also hold 71.5% of Wi-Fi. And he did indicate they would be willing to sell down some or part of that position to fund additional Ethereum purchase without additional dilution to Bit Digital. So that was a key differentiator as well. Now, you just mentioned Michael Saylor being responsible maybe for this treasury strategy taking mainstream adoption. He was the keynote speaker on the second day. A great presentation on strategy, also a detailed breakdown of all of their derivative products, Stride, Strife, Strike. So very interesting to learn how he's really attacking not only the financial markets or the capital markets, but now some of the bond, the treasury, some of these other large addressable markets.
Yeah, and Michael Saylor's obviously wrote the playbook for this, and he can go ahead and use any number of levers available to him at any particular time to do this at very little risk to the company or the shareholders. And it's just amazing. I mean, the size of that hodl there, well over 640,000 Bitcoin now, and he still reiterated, we're not stopping here. We're going to keep going. 5% looks like the initial target there. But the audience was packed out for this one there. He was the keynote speaker on the first day. We managed to get our seats. I think we were like the third or fourth person to enter the room. We'd been waiting around to get into there, and we managed to get seats very, very close to the stage. They'd reserved the first two rows for HC Wainwright personnel, but we were on the third row there, and we took some nice photographs. And if I said before, if ever you feel down about Bitcoin, then put on a a Michael Saylor video on YouTube, and it really perks you up after 20 minutes. He does really explain this really well, and he's done it so many times that in terms of his speech, there would be no editing requirements to it. He literally goes through a 40, 50 minute speech without any pause, breaks, ums and ahs that a lot of people do when they're doing these podcasts. But hats off, he was the keynote speaker and deservedly so.
Yeah, very well polished. And as the speaker face of Bitcoin, great to have someone of that caliber in that position. So that was it for day one at the conference. Kicking off day two, we had a presentation from Darcy DeBarris. He's the CFO of Hive. We've obviously covered their expansion in Paraguay extensively on the channel, but this was another strong presentation and a great reaction from the audience.
Yeah, I mean, they've really, turned the corner this year in terms of hash rate. Remember at the start of the year, go back to January the 1st, they had a hash rate of about 6 exahash. Well, if you look where they are now, that's at, well over 18 exahash. They achieved that in the time frame that they set. So again, like CleanSpark and IREN, you set these big targets, you achieve them, the market likes that. And they've got another target now to get to 25 by Thanksgiving. So they're not stopping there. They don't appear to be stopping on the Bitcoin mine like some of the peer miners have done there. They're continuing to grow. Now, second to that, obviously, is the high performance compute. And that business has been doing really well. The annualized revenue at the moment is $20 million. That's going to grow to $40 million by the end of the year. And by the end of 2026, that's going to be at $100 million. So they've got these two strategies hand in hand, delivering a significant amount of returns for the company. And I'm sure now that shareholders will be in a far better position seeing what's happening now than they were maybe in those early years post the bear market when other miners were using that opportunity to start growing. Hive have turned a corner this year and starting to grow both strategies really well.
Yeah, they certainly are. Now, following Hive, CleanSpark, Harry Sudek, he's the chief business officer based on that recent appointment news we just covered last week. He walked through their presentation. We'll talk a little bit more about this in the following panel discussion as well, but pretty evident now that CleanSpark has made the decision to pivot to HPC AI. They talked extensively about their Atlanta sites, again located in Georgia. Obviously, they have more than the Atlanta sites in Georgia, but those two seem to be, for a number of reasons, proximity, nuclear power, and obviously latency, a lot of characteristics that hyperscalers really like in those locations.
Yeah, I mean, I think that the terminology they were using, it wasn't directly saying HPC. It was looking at how they could get the best revenues for their megawatts, and that might be other than Bitcoin mining. So they've been very careful how to do this. Remember, they were a true play Bitcoin miner up until literally a month ago, and obviously we've seen the Zach, the previous CEO, has left the company for personal reasons. A lot of changes happened there. They've obviously Matt Schultz has gone in as CEO. He was doing the job a long time ago, but obviously doing the job now. You're managing a $2 billion company or just over $2 billion company. So a lot of change there. And they've got this catch up. If they're going to do that, they're going to have to start thinking how they're going to catch up some of the miners who've been going out there, getting partners to build data centers, getting the right size of data centers, having discussions with all the relevant hyperscalers who will have been having discussions with everybody else first. So I'm glad they are starting to look at other strategies to use that power for, because I think Bitcoin mining maybe have another 2 to 3 years in terms of when we get to that next halving. The difficulties killing miners at the moment. The next halving will really put a line in the sand as to when your revenues reduced by 50% overnight and all your other costs don't change. That's a real problem. And having gone through the recent earnings position, I was under the impression only one miner was green. Actually, there was two miners who actually managed to make an overall profit, taking account of every cost and excluding the FASB rules, which are really a paper transaction to show the valuation of change in Bitcoin. There was only two miners out there that actually delivered a green net income. This is now when the Bitcoin price is 113,000 and we're not at the halving. Now, I could be proven really wrong. I mean, if the Bitcoin price goes to $500,000 and nobody else joins the global hash rate, then it's going to be in a really nice position, and we might see miners actually think they can get more money by building up their hash rates at that point in time. But I'm looking at this from the fact that I've been in the space now 5 to 6 years. I've also listened to a lot of experts in the areas, listened to the likes of Ben Gagnon, listened to the likes of Dan Roberts, and they've also made similar remarks about the length of time that Bitcoin mining really has there, and especially from a public perspective because of power costs. So I'm glad that CleanSpark are looking at doing that. They're still going ahead and trying to get to that 60 exahash. They also said that they might be even to raise that even further, but they didn't give us a definitive answer on how much more hash rate there. And you're quite right, Bryce. Some of those sites around Atlanta, Georgia, might be, really suitable to deliver HPC. Maybe not on the scale that some of their peer miners are looking at delivering, but actually, in terms of scale at HPC, the revenues start coming in no matter how many megawatts you're using.
Yeah, they certainly do. And we are seeing potentially not a co-location deal, but we are seeing a lot of smaller data centers in the case of WhiteFiber or Wi-Fi in urban areas. So potentially CleanSpark goes down that route. Following CleanSpark, Salman Khan, the CFO of Mara, he's been on the channel a few times recently as well. This was a strong presentation. They're also trying to find their foothold here in the HPC AI space. He talked a lot about some of those recent acquisitions over in your neck of the woods, Anthony. But for me, again, we really just need some clarity on what the next steps here are for Mara.
Yeah, and I did a recent poll asking the retail shareholders out there on social media what they believed, Mara's strategy was, and to be honest with you, it was a bit of a mixed bag really, and nobody's got a clear, definitive answer. So, we're going to obviously speak with the company and trying to, get some communications out there that are short, punchy communications that show exactly what their aim is there. They do have some good strategies there. I do like, the fact that they partnered up with a joint venture in the Middle East to deliver, Bitcoin mining in probably the hottest place in the world. And, they're really being successful in that area then. That's got potential to grow. Bear in mind, when you think about the amount of stranded energy in the Middle East with all the air conditioning during the day turned off at night, that's perfect for Bitcoin mining. And most people wouldn't have even thought about that, but Mara did think about that. I like this move into buying this new company, which is a subsidiary of EDF, one of the big power companies in Europe, French based there, but operate a lot of power in the United Kingdom. So obviously operating in my neck of the woods, as you rightly say there. They're not forcibly moving into high performance compute. They've been clear to say that. However, Salman did say that their strategy, again, like many of their peer miners, is to see what they can deliver with their megawatts going forward. And I suppose, when they say they're not delivering, they're probably having, conversations and analysing the power that they have on their sites. Remember, they now own about 70% of the infrastructure supporting their Bitcoin mining, and a lot of these sites are significant sizes. So if they were to go down the HPC route, they've probably got energized sites that can be refurbished to allow tier 3, tier 4 data centers to be built there and start delivering this much needed power to sustain the AI HPC service going forward.
Yeah, great analysis there. Now, following Mara, we had our good friend Riot Platforms, Phil McPherson. He leads the IR division at Riot. This one, for me, I think a lot of people have really overlooked the size, the scale that this company has, both at Corsicana and at their Rockdale facility. This continues to be one of my largest holds, and I think we could see a nice surprise from Riot based on the amount of power they have, the study that they've conducted with Altman Solon, and the fact that these buildings, the substations, the water retention ponds, a lot of this stuff is already in place, up and operational, really giving them a head start or foot in the door.
Yeah, and they've gone and bought significant additional land at the Corsicana site in readiness now to deliver that 600 megawatts to high performance compute. Now, in terms of ancillary power, that's probably going to get somewhere between 450 and 500 megawatts of compute power. That's going to be sizable. Remember, the Core Scientific deal with Corey was 590 in total. That was delivering $850 million a year in revenues once it was all up and running. I'm assuming Riot can do something very close to those numbers as well with what they've got available there. But what interests me as much as Corsicana is the photographs of the Rockdale facility. As you can see, they've done a lot of land works there, and we've been questioning the company. Are you preparing? Now, bear in mind, when we talk about HPC, and Patrick Fleury from TeraWulf, he made this very clear. It doesn't happen overnight. So any of those retail investors think they can have a couple of conversations on Tuesday, sign a document on Thursday, and we're up and running, deliver it on the following Monday, need to really think again. Some of this high performance compute will become operational maybe 2027, 2028 for a lot of these companies. They've maybe got sites, but they haven't even started putting a shovel in to start putting those sites up and readiness. So Riot are preparing land, and they will look at using that land to build the various facilities as and when a client is named. They probably start building them maybe even before that, just so that they are in that position from a time frame perspective. And it's very interesting, you hear about, the hyperscalers out there. These hyperscalers have to go and order their GPUs well in advance, and they're on a sort of like a timetable to receive them. And some of them might not have sites for them when them GPUs come out. The last thing you need to do is put those GPUs in the garage and wait a year for a site to be available. You want to get those GPUs out as soon as possible. And I think Riot can develop those sites there whilst maintaining the Bitcoin mining business, which gives them free cash flow, again, operating until those sites are completed. And then once the sites are completed, they can basically refurbish what they've got in terms of Bitcoin mining sites and have some significant power diverted to HPC. Because at the moment, what we're hearing is the return on investment for HPC is more significant, more predictable than Bitcoin mining.
Yeah, you're right about that. And good point on the land acquisition. Another nugget I picked up during our conversations here, data center campuses for GPUs or HPC AI require about 10 to 1 in terms of the size or scale of these facilities to a Bitcoin mining facility or data center. So great to see Riot purchasing additional land. We then had the dream team from Bitdeer Technologies Group, Harris Bassett, and of course, Jeff LaBerge, who we've had on the channel again multiple times. The X factor for me, and they made this very evident in the presentation, they're in the perfect position right now in terms of Bitcoin mining. They're producing these machines. They're coming out very competitive in terms of their performance with the other contenders in the space. And if they don't sell them, they can put them in their own data centers. So they're really in a strong position. The A3 is expected right around the corner here in the tail end of 2025. They're going to start filling up their data centers with the A3. They're going to start selling those. And either way, they're really in a strong position to succeed.
Yeah, and you hear this term vertically integrated, and you hear miners saying we're fully integrated. Well, nobody's more fully integrated than Bitdeer because they actually make the machines that they're using for Bitcoin mining. So they go a step further than all the other miners. They've got the sites. They've got probably, we hear this term pipeline of power. It's not pipeline of power with Bitdeer. These are sites that they are developing at the moment. They've got nearly 3 gigawatts of power in 4 separate continents around the world. So they are so diverse, which in a way actually helps the company because it avoids, if there's any tariff issues, they've got 3 other continents other than North America to use there. They're also now building their, seal miner machines in California as well as in Malaysia as well. So they've got 2 separate facilities building the machines there. And one thing about Bitdeer, I mean, remember Jihan Wu, the CEO of Bitdeer, he was the former founder of Bitmain, who are the largest current supplier of ASIC machines across the board there. So it's no surprise, that Bitdeer are delivering this now. And in terms of efficiency, they're about to go into production now as we speak for the A3 miner. That's going to be around about the 10 joules a terahash. Maybe 10 or 11 joules a terahash there. That's going to be at the really most efficient mining machines on the market as we speak. and there's an eye focusing on the A4 when that starts to be developed and come out in the early part of 2026. That's expected to be even half the the efficiency again down there, 5 to 6 joules a terahash. Now we talk about the halving. When you've got efficiency of that level there, when you're working in different continents and you're working with some sovereign states and you have that efficiency at that level there. And what I mean by efficiency, when your efficiency is low, you're able to use less power to mine Bitcoin. So that's a positive. And when your efficiency, if they put their own machines in and they use the Seal Miner A4 when it gets to the halving, they've probably got one of the best and only opportunities as a public miner to continue mining through the halving because, again, working with alongside the likes of Bhutan, and we're also seeing Scandinavia now, some of the power costs there are coming down in Scandinavia. That gives a welcome response to mining in those locations. They might be able to hit it off doing there, but equally, you've got to look at what they're focusing on as well. They're focusing on delivering some of their big American sites for HPC. They can see, like every other miner, having these big sites there. And the Clarington site there, 570 megawatts. So you're talking along the lines of Corsicana, and Rockdale. And they've got sort of 5 or 6 sites in America that can easily start to be utilized for HPC. And again, this is a company that you want to cast a watchful eye over as we move forward.
Most definitely. And he also talked about their Maslin, Ohio site, both of which, as you say, looking quite lined up for HPC opportunities. Next was Soluna Holdings. We had John Belizaire, the CEO. Big one for me here. They've really had a tough time proving to the market that they're able to deliver these projects on a large scale. You can see that in the share price up until really this week. Now, John came in, another strong presentation. He essentially said, as you start to look through some of the completed projects now and the return profiles, both pre-flip and post-flip, or essentially once they've paid back their debt or creditors on each site, looking very positive. And in addition to that, they've got a large pipeline of potential projects as well. John going on to say now all they have to do is really rinse and repeat. And when we get into the share price chart in a second here, you'll see that the market obviously is now starting to understand and realize that John and team do have the ability to have multiple projects on the go, and they have a long pipeline ahead of them.
Yeah, and it was a very polished presentation by John. We've had him on the channel many times. We're always coming off the channel, scratching our heads as to why the market capitalization is so low when actually you see what they're delivering firsthand from the CEO of the company. Quite right. They've already sort of operating now Dorothy 2, Project Catty's on the go there. They've got, I think at the moment, 3 sites that are in progress, and that's very unusual for the company. They usually tend to do one site complete, then move on to the next site. But they're now sort of because of the demand for services, they're looking at trying to, at least deliver 2 projects simultaneously. And you're quite right. Those slides where John showed what the potential return is before the total commitment's been made to post that is miles apart, and the future looks bright. The only obviously issue is how long it takes to repay back the actual cost there. So that wasn't, we didn't ask that question there. Maybe that's one for John on the next time we have him on the show.
Yeah, and he did mention it. It's based on each project essentially, but yeah, some very good economics there. Following up John's presentation, the second keynote panel that we attended, Bitcoin mining and high performance computing. So this one was excellent. There was quite a few people on the panel, so we didn't get a lot of questions in or hear from as many members as we'd like. But the standout for me probably was CleanSpark on this one, really talking about that HPC strategy. We weren't able to hear Matt in the individual presentation, but Matt Schultz, the new CEO, was on stage for this. And again, as you say, Anthony, giving some very clear indications, I'll say, that they are starting to look at alternate uses for their megawatts.
Well, they have to be honest with you. I mean, we know the Bitcoin mining business, they're not even delivering a profit in the last quarter in terms of having 50 exahash. So, it's a real challenging business model for them. and all their peer miners have been looking at this now for some in excess of 12 months. So I'm glad they are doing it. I'm a shareholder in CleanSpark, but I thought this should have been looked at maybe 6 to 12 months ago. But I think you're right. The panel, was too large. We had six companies represented, and it was moderated by Russell Can of Core Scientific. And I think we got chance for. I don't even think everybody answered two questions. That's how long it was taking to get through there. So I think food for thought next time, HC Wainwright, maybe make it a panel of maybe 3 to 4 as a maximum. It just took so long, and then you sort of like you. I think Santa Bar answered one question and didn't get the chance to answer another one. So, but a very very strong panel. I mean, we work alongside a lot of these CEOs on the panel there, and it was great to see them put their companies in the spotlight to an audience that probably doesn't know enough about Bitcoin mining and high performance compute.
Yeah, and there was a lot of people taking notes in that audience, very actively engaged. So, following that up, we went out to PubKey, the Orange Group event. This was an excellent event. We got to meet many of our subscribers, followers, industry experts, and the CEOs we work alongside. In a more casual atmosphere. We've got some great pictures here. There was also two panels at this event. The highlight of that one for me was Mike Alfred talking about the future potential of this space, stating that we're really only in the first or second innings. And as you'll see towards the end of the presentation, this entire sector has really just been ignited. Despite the fact that Bitcoin really isn't doing a lot right now, we haven't seen the rate cuts yet. We haven't seen a lot of these hyperscaler deals or contracts being announced at this point. So there's still so many catalysts to come. And listening to Mike Alfred, for me, similar to Michael Saylor, very inspiring, very well spoken, and obviously doing very well on his positions.
Yeah, and we know Mike from obviously as well as being a director of IREN, he's also very positive and spends a lot of time informing people on social media, especially using X as his platform to do that. And I'm sure there's quite a few people at that meet up there going to say thank you to Mike because he has come out with a few stocks in recent periods there that have done really, really well for everybody. My highlight was exactly right. I mean, we had two panels there, the Treasury Management panel, which was actually a fun panel there. And bear in mind, a lot of these treasury companies are quite new, and therefore it's still very early days to see that. We saw the initial spike from the likes of Metaplanet and even Strategy itself and a number of other companies that have come through there. That seems to have like pulled back a little bit, but I think the market just needs to settle. We don't know who are the sort of like the riders that are going to make the whole race at the moment like that. But there seems to be enough of them out there. I was quite engaged with that panel there, but the Bitcoin mining panel that came on afterwards, equally engaging. And Darcy from Hive, Harris from Bitdeer were able to articulate along with Mike their actual points. And one of the key things I came across, and we say that to people as well, is Bitcoin is volatile, mining stocks are volatile, and don't really pay too much attention to the day-to-day movements. Think about more of the longer-term strategy, and you see these companies pay off in the long term. And obviously Mike's with IREN there. You can see how in April that share price was hovering around just under $6, and we'll talk about where it is in a short while. But things can change really, really quickly. You've just got to do that underlying due diligence about what each of these companies are doing now. What are they moving into in terms of their strategy going forward? We try and give you a little bit of help by putting some of that information together, but that's not enough. You've got to go and do some more due diligence yourselves before you start making those picks. We won't give any price predictions on here. We don't even know what the Bitcoin price is going to be in 10 minutes' time. Never mind what it's going to be next week or the year after. And, if we don't know the price of Bitcoin, we're not here to tell you what the share price is going to be. But what we can tell you is the strategies that these companies are adopting. Who are the sort of like likely maybe winners in terms of having experienced members of the board, having great teams around them to work with, having the experience of partnering with the right type of organizations to deliver that strategy. And I hope that you realize we've been trying to do that ever since we started the Power Mining Analysis platform back in January 2024.
Yeah, it is nice to see some of that due diligence paying off here. And I did want to give a special thanks to Ugia and Bitcoin Bella for hosting, organizing, inviting us to that OG event. It was fantastic, and I heard a lot of positive feedback. So, great event if you ever get the chance to attend one. Or if you're in New York, I would highly recommend PubKey, an awesome spot to go, and you'll always find some good conversations there. So, following up our PubKey night, day three at the conference, only one Bitcoin miner that we took in on the third day, DMG Blockchain. Now, their angle is really going after government contracts, military contracts. They've already purchased up to 10 megawatts of prefabricated data centers that are SCIF rated for military deployment. So, a very differentiated approach. They also have their Core Plus software suite and division. Again, a key differentiator. And coincidentally, came out with their production results, which we'll get into next.
Yeah, it was a polished presentation by Stephen Sheldon, and we've had them on the channel many times over the last 18 months there. I think this company gets really overlooked in terms of the fact that it's based in Canada. It's having that challenge to reach across to the retail, the institutional investors in the US there, that some of their peer miners seem to be able to get on board with more relative ease. One of the observations I made after the presentation was the fact that their net asset value as we stand today is 1.87. And now you'll be asking me, what does that mean, Anthony? 1.87 means for every dollar you invest in DMG at the moment, you're getting effectively $1.87 in terms of asset value, net asset value. So if the company was sold off by its parts, that every shareholder would receive 1.87 in terms of their net asset values. If you look at all the rest of the peer miners, no other peer miners anywhere near that. And the majority of peer miners, effectively, their share price is at a premium to their net asset position. So many under one. So if you're at $1 for $1 share for $1 of assets, that's very good. But a lot of these miners, are probably at the 50 cents, maybe 40 cents. And I know a couple of the big ones are even lower than that, probably at the 20 cents, because they've been given a big premium based on future revenues. Now, I like what DMG do. They do things, in a more enclosed way. They do everything from the company itself. Sheldon's the longest serving CEO of all the mining companies out there. He's done so much. He's built facilities for other companies, the likes of Bitdeer, the likes of working with Mara, built the Mara pool for Mara, have now got their own Terra pool, which they highlighted today, is going to be used for Bitcoin that is produced using fully renewable energy. And they believe that people might pay a premium for that. Time will tell on that there. But having that ability to mine Bitcoin with 100% renewable energy, certainly from an environmental standpoint, puts DMG a little ahead of some of the peer miners.
Yeah, it truly does. And we talk about their software stack. That's really why they need all those different elements of the business. Really enabled them to set up this carbon neutral ecosystem. Again, time will tell if people will pay a premium on that. Now, in terms of their monthly production, the number that stood out for me, the Bitcoin HODL, they had sold this down considerably to finance a lot of the stuff we just talked about. They are starting to rebuild that. Sheldon did mention it in the presentation as well. Why don't you take us through the August results?
Yeah, so August numbers came out a few days ago. Obviously, we've not done the podcast, so we're going to catch up with a couple of the miners on this particular podcast. Bitcoin mine 23. Obviously, it's a reduction from the July of 26 there, down 12% there, and in terms of difficulty and the average hash rate slightly lower. That will have impacted there. Bear in mind also, you're in the seasons where miners are doing far more curtailment. This might improve as we go forward now into getting close to Christmas. When the temperatures cool, it gives miners more opportunity to mine more round the clock with less curtailment. In terms of their operational hash rate, that dropped from 1.56 exahash to 1.53. Remember, they've actually got 2.1 exahash energized. So they when everything's moving, they can literally have 25% more more hash rate on the go than they were operating within the likes of July and August. In terms of efficiency, getting closer to that magic number of 20, anything below 20 is really market leading. They're at 22.6. They only sold 6 Bitcoin of their production. Remember, in July they sold 60 to help pay for the miners that they had in there, and also help develop some of their other strategies with that cash there that they received from selling 60 Bitcoin. But you're quite right. When you look at the HODL for the size of DMG, this is where we talk about, the net asset value of the company. That HODL is literally 80% of the market capitalization of the company. So the HODL value, as at the end of August, when the Bitcoin price was $108,000, is 35.1 million. The HODL today will be significantly higher than that, because the Bitcoin price, last time I looked, was about 113,000. So an extra 5,000 per Bitcoin added to that there probably takes it over the 36 million mark, and that percentage probably increases to maybe 83, 84%. It has come down based on the previous month, and that's because of two things there. One is the fact that the Bitcoin price has reduced from 115,000, which it was at the end of July, and secondly, a lot of these mining share prices have been on the increase over the last month or so, and that way the market capitalizations have increased there, so therefore the percentage. But if you look at that, I mean, still Mara and DMG streets above everybody else in terms of percentage to market cap. No premium whatsoever given for these two companies, and this is why I sort of scratch my head listening to the Treasury management companies when they're saying they're expecting to see a premium for their Bitcoin, but not necessarily for the mining companies.
Yeah, that's a really good point you bring up, and always nice to take a look at that chart as well. Now, the second production report we have is from John Belizaire. We just covered his presentation. Some great images showcasing the groundbreaking at their new project, and an update on Dorothy 1 and 2 continuing to move along at rapid pace.
Yeah, and in terms of their operational update, we focus on Bitcoin mining, but actually, self mining is not their biggest part of the business by any street. I think it's probably the smallest part of the business when you look at it. In terms of Bitcoin mined, only 7.4 Bitcoin mined during the month of August. That's come down from 8.5. Again, it's the reasoning that we give for most of the miners, having reduced all the miners on the same hash rate have reduced their operational production for August. 13% down, very similar to what DMG lost there. In terms of the hash rate, that's come down by 3%. So again, with the difficulty, that's the reasoning there. And the fact we're in that sort of like hot month of August, and Soluna are based in Texas as well, some of their sites in Texas, where the hot weather would have been, probably had to be curtailed numerous times during the period there. Operational power for their site, 75 megawatts. They've got this massive pipeline of a couple of gigawatts in the future. And this 75 is going to start ramping up in 2025, 2026, as they start delivering some of those projects that are on the go at the moment. Remember, they've got 3 separate projects in production at the moment. So that 75 is covering everything that's actually operational, all the revenue driven projects there. One thing I will say is the hosting business is on the increase, 37% increase between July and August in terms of hash rate. So 2 exahash at the end of July, getting close to 3 exahash, 2.8 exahash at the end of August. And remember, they've got some significant clients. They're already looking at after Bit Digital's machines, and they're going to be taking on Galaxy's machines when the actual Helios site starts getting refurbished for that big deal with CoreWeave. So there's plenty in the future going for Soluna there. They've actually literally one of their projects is going to be solely used for literally for Galaxy. So that's already a project that's gone to the board there. And had the green light to get that on the move there, and you've got one of the biggest clients putting in there now. Going back to the presentation, John said there was even some bigger clients in Galaxy, and Galaxy are at 10 billion, maybe more now, based on the last few days. I haven't looked in the last couple of days, but it was certainly a $10 billion company the last time I looked. And they've got some bigger clients than that. So really looking forward to seeing Soluna. I mean, the market capitalization doesn't really reflect what the company's delivering. Have a look at the presentation from John there. If you get a chance to see the video of his presentation on YouTube when H.C. Wainwright start issuing those, and they have started issuing some of the presentations now. I was informed that these presentations would go live at some point. So have a listen to the presentation there. Get a view of what you think about John there. Look at the projects they're delivering. Look at that slide that tells you what they're going to receive as the project's completed and what will happen once the project's been paid back. Two very, very different percentages, and it will put Soluna really in a driving seat as we go forward in the next few years.
Yeah, it certainly will. So, with that being said, a nice summary of all 3 days at the conference. Again, so much information and insights. As you just said, I would highly encourage you guys to watch these presentations if possible. But for us, a very valuable trip, and obviously extremely grateful to HC Wainwright, specifically Kevin Deedy, for the invite. Now, for the next portion of today's podcast, we needed to address this melt up we're seeing in the Bitcoin mining space. Both yesterday and today, the Bitcoin mining stocks, specifically those with HPC AI aspirations, so essentially all of them now, just absolutely taking off. We've been talking for months and months about this re-rate that was imminent. These companies have a lot of power, a lot of megawatts, a lot of data center expertise, which is exactly what HPC AI needs. And it now seems the market is waking up to this. Now, by definition, a stock melt up describes a sharp and sustained rise in stock prices or market, not necessarily driven by fundamental economic improvements, but by investor exuberance or excitement in the space. That's exactly what we're seeing here. Obviously, we have seen some fundamental developments like the Wulf contract, like the CoreWeave contract, like the Galaxy contracts. But for many of these miners, specifically Cipher, IREN, they're getting a lot of attention pre-announcement, which is really exactly what we thought would be happening here as we start to see more of these contracts announced.
Yeah, absolutely, and we show this slide of the share performance since the start of the year at various stages, and when we looked at the last one we showed, which was literally 2 weeks ago, you can do a very quick comparison, and they are light and day in terms of differences there. Before I think we only had a couple of miners who could actually have a green period for every one of the four periods during the year to date. Now we've got significantly more than that. If you look at the latest position now, there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 of those miners green from year to date and green in every other period on that slide there. So that shows you the last month has been insatiable for the mining companies. Cipher up 110%, TeraWulf up 98%, IREN 82%. And even then you look at the likes of Riot up 45%. Bitfarms have had a pump in the last 2 days. They're up 41% year to date. And Hive having a great period as well, 46%. If you turn your attention to some of the miners that aren't or haven't been looking at HPC in the same way, CleanSpark, 0% in the last month. Mara at 2% there, so maybe they'll start to focus on why these other stock prices have been getting some advantage on the fact that they've been looking to use their power towards high performance compute. And then we see some more material information from the likes of Mara and CleanSpark. Hopefully their share prices will start to do exactly the same what we're seeing now with the other ones. But it's a really good period at the moment to be in terms of the mining companies. What I will say is, we spoke to quite a few people last night. Some people are now starting to take a few bits of profit off the table there. Me and you, Bryce, we've been looking at doing the same as well. Just taking a bit of profit off the table. These numbers are at some of them are at literally year-to-date highs, some are all-time highs. And as my grandfather said to me, it never hurts to take a profit.
No, you can't go broke taking a profit. And I really wanted to just pause and reflect back on the last few months here. It's so funny reading the comments of these videos on those big red days. People just absolutely livid at the miners, the management teams. Those comments have started to go away now. And you and I have been saying since day one, Anthony, this is a volatile sector. You should not be in this sector if you don't like volatility. Unfortunately, with volatility, to have up days like we see today and yesterday, they also come along with some big red days as well. So, as we've been saying, zoom out, don't look at a metric individually. Think long term about your investment and your investment thesis. And as you said at the start of the presentation, if you do your due diligence, you understand these companies, you really shouldn't worry about those red days. The final point I just wanted to stress, as you said, Anthony, take profits along the way here, you guys. If you were involved in the last bull cycle in the crypto space, there was a lot of people, including Blonity, one of the OGs in the space, that really have some regrets about maybe not taking profits. So hopefully everyone's accounts are green today. Hopefully you guys are making some money. Hopefully our videos have helped you in some way, and make sure you take profits along the way if you can.
Yeah, absolutely. And special mention to probably two of the smaller miners, DMG and Soluna today, where their share prices are actually at the highest compared to their peers. That's helped their monthly position. So have time to look at that comparison chart there. Look at the one we produced 2 weeks ago. Look at where it is today. Look at where the market capitalizations have changed there. I mean, who could have foreseen 6 months ago that IREN would be approaching $9 billion now, already $3 billion ahead of the next largest miner in this table here, which is Mara. And actually, it's very close now for seeing Riot actually overtaking Mara as well. So this HPC strategy for a number of the miners seems to be getting the attention of the market far more than the Bitcoin mining. We've spoke to analysts for the last sort of 12 months in this space. We managed to see a couple of the analysts that travelled down to the Denton presentation last year when Core Scientific announced that wonderful deal with CoreWeave. And, they're still the same light that they don't see the business model in the same way that the miners see it, but they do see the HPC. That's far more predictable. These are contracts which state the amount of revenues they'll receive. They can calculate the costs associated with those revenues. They can calculate the return on investment. It's very, very much a predictable model. Bitcoin mining is not a predictable model, but when the Bitcoin price rallies, it's a great position to be in. When the Bitcoin price drops, you're going to have those red days. And that was highlighted yesterday on that panel. We see those 15% rises one day. The next day, we could be down 18%. If you're in this space, you've got to be aware of both of those types of days.
Yeah, you certainly do. So, with that being said, we'd love to hear your comments in the section below. What were your key takeaways if you were able to catch any of the conference or from the discussion today? Which of the miners are you eyeing closely right now? There's a reason we've picked all of these companies on the list. It's a good looking basket of stocks. And as you say, don't overlook some of the smaller players. Based on market cap, there's still a lot of opportunity, we feel, in all of these names. So, with that being said, thanks so much for watching. Hit the like button if you're making some money this week, you guys. We'd really appreciate it. Feel free to subscribe. We'll see you back here tomorrow.